Hey guys, Mike from Mortgage Nerds here in Appleton. I'm here with
Brian Hofmann
from Mortgage Nerds in Appleton as well. And today we're going to do a little thing called Rapid Fire. We made it up 5 minutes ago. And so you guys get lots of information quickly. Brian has no idea what I'm going to rapid fire at him, but he's somewhat good at mortgages, so I figured he'll be able to handle it.
Just somewhat.
Somewhat. That's all we expect here.
Of course.
Just kidding. So, rapid fire, ready?
Ready?
Escrows. What's an escrow?
Escrow, taxes, insurance goes into an account. Every time you make a payment, portion of your payment will go into that escrow account. So when they come due, they will be paid for you. December for your taxes here in Wisconsin, and insurance, depending refinance purchase, when it's due.
Yep. When we use the word escrow in Wisconsin, we're talking about property taxes and insurance. When you use the word escrow in California, it's
Whole
the
different animal.
process of closing.
Correct.
I don't know why. I'm not licensed in California. Appraisal waiver.
Appraisal waiver. So when you are running a file, there are certain parameters to where an appraisal waiver is possible, but you run it through the automated underwriting system
AUS.
and it will tell you if you are eligible for an appraisal waiver. You get an appraisal waiver, no appraisal needed unless you want one. You still have the choice to get one if you want.
Don't do it.
I wouldn't do it either. With that, saves you anywhere from $500-$600 and
It streamlines the process a little bit.
immensely. You
Not
go
a little,
from
a lot.
in
Yeah.
our current market, possibly closing 30 days to 10 days or less.
Yeah, cool. Home inspection.
Home inspection. I recommend you get one. I don't know if I would feel real comfortable advising somebody not to get one. And
Yeah.
I do hear of people advising in today's market to get an accepted offer. Home
To
inspection.
like make it
Yes.
knocked in.
Home inspection.
What is it though? Yeah.
They go through the house with a fine tooth comb versus your appraiser. They go through looking for value for some issues. If it's an FHA, USDA, VA type of home, there's certain criteria. Home inspector goes deep into the analysis, heating, roof, attic, insulation, all that good stuff.
Good info. You highly recommend getting one.
I do.
And I'm sure you have one in your back pocket, or a couple that you would refer. If somebody ever had a question, they can contact you
Absolutely.
for that. Closing costs.
Closing costs, the cost of doing a loan, mortgage. There are different things that go into the buckets for closing costs. Sometimes some lenders will have processing, underwriting fees in there, or origination fees those are lender fees. Sometimes they're discount points that will be buying your rate down if you choose to. Then you have your title fees, you have your recording fees, your escrow setups, taxes, insurance, all that good stuff. VA if there's no service connected disability, VA funding fee, upfront mortgage insurance premium, lots of different fees. However, each program has their own.
Yep. And just based on rate that you choose, based on your unique situation, you could have anywhere from a no closing costs loan all the way to a more expensive type of loan where you'd be in the house longer.
I actually approved a VA buyer the other day.
Purchase, refi?
Purchase.
VA purchase.
$1 million property.
Nice.
Okay.
Yep.
The credit for their rate
It's called a lender credit. Yep.
paid for all of their fees, every single fee. They actually were getting money back, so we had to reduce the
Principal reduction.
of the loan amount because that credit paid for everything.
So not only was it a no closing cost loan, it actually some of the lender credit went towards buying down their loan.
Yeah.
That's impressive.
Mhm.
Large loan amounts. You don't do that on an $80,000
No,
purchase.
not at all.
Cool. Break-even analysis.
Break-even analysis, when you take money saved versus money cost to do the loan, work out all the parameters, the amount that you're saving versus interest. There's a lot of different dynamics that go into it, but it gives you a time frame when you will break even on doing that mortgage.
What's the number one factor that goes into the break-even analysis? The biggest one?
As far as with reduction in monthly payment with the overall costs or that interest rate.
So
there's a lot of difference with interest and things like that.
Right. Break-even really determines how long you're gonna be in the property.
Yeah.
Right?
Oh,
That's
absolutely.
one of the
Yeah.
biggest things is
Yeah.
how long you be in the property. We got to work backwards.
What makes
from there.
sense if you should refinance. That's
Yep,
basically what
absolutely.
you're looking at.
All right, cash out versus rate and term.
Cash out refinance is, depending on loan program, well, actually now, yeah, depending on loan program still, you can go up to only a certain percent of your loan to value. So $200,000 house, let's say you're doing a VA loan. Now, max that you can do, 180, yeah, 90%.
You can go to 100%.
You can, but it really gets expensive at that point.
That's
so
the
cash
maximum.
out, you're taking equity out of your home.
Yep.
And whether you're paying off debt with it or using it for a remodel, things along those
Whatever
lines.
you want.
Rate and term, you are taking a reduction in your interest rate to lower your monthly payments.
Perfect. Last one, LLPA.
Loan level price adjustments. LLPA. So when you go to get a rate, there are certain parameters that are defined by Fannie Mae, Freddie Mac. What buckets they want. So credit score goes into that, loan to value, debt to income ratio. There's a lot of different factors, but those adjustments change how your rate is because you have a raw price rate, and then you go in and you get your loan level price adjustments, and that will actually tell you where your cost and where your rate ends up.
Right.
That's why everybody can have a different rate. Buying the same home, buying the same thing, all those different things come into play.
What's different? You.
Correct.
Right. Your loan level price adjustments are different based on your parameters. So let's say you said the base rate was 2% on a 30-year fixed, right? And then this is just an example, 2%, and then you have a 645 score. Now you're at 2.25.
645 score, and it's conventional financing. Now you're at 3%, but on an FHA loan, you might be at 2.25.
Right.
So your loan level price adjustments vary by loan program.
Right. So why don't they just figure out which loan program they want before they call us?
Right. That's what we're for.
Oh, that's right. That's what we are for. So hopefully that gives you guys some insights on all the moving parts of mortgages. Thought it'd be fun just to do something a little bit different, educate you guys randomly on some of those terms. But the whole point of this really is to let you guys know mortgages are complex. Let us
give you the answers you need.